That's a 172% increase in the value of the stock. All right, welcome to Talking Investing. I am Tom. I am not a financial advisor. This is not financial advice. We're here to talk about all things investing, and today I want to talk to you about a company called AYRO, stock ticker AYRO. This is an electric vehicle manufacturer. So what I want to do today is they released their second quarter results a few weeks ago. So I want to go through that, talk about sales, talk about production, talk about their cash position, and then there are some issues. So I want to talk about their issues and possible solutions, and then look at a forecast and see where we think this thing is going. All right, so let's go to the press release on their second quarter earnings. AYRO announces second quarter 2021 financial results and provides corporate update. So AYRO Inc., a designer and manufacturer of purpose-built short-haul and last-mile delivery electric vehicles, EVs, today announced financial results for its second fiscal quarter ended June 30th, 2021. So they have two different cars, the Club Car Current and then the AYRO 311. So back to the quarterly results. Okay, revenue of $522,067. That's an 83% increase year over year. Okay, so that sounds okay, but actually, that was a pretty big disappointment. I just want to show you a statement from their first quarter earnings to try to put this into perspective. So this is AYRO's first quarter results. So if you look at this line right here, revenue of $788,869, a 437% year over year. That's more revenue than they did in the second quarter. So they go on to say, this was the sixth consecutive quarter of quarter-over-quarter revenue growth. Well, in the second quarter, they did not do that. They sold less for the first time in a long time. Okay, so I have some theories on why I think that happened and what I think they've already done about it, but we'll get into that. Let's keep going through these results. So they had a net loss of $7.7 million. You know, as an early stage growth company who hasn't really started ramping up sales yet, that's not too concerning. The one concern would be if that represented a significant portion of their cash, that would be a problem. So let's talk about cash next. So they go on to say total cash of $87.9 million as of June 30th, 2021. And in the very next line, they say no debt as of June 30th, 2021. So financially, this company is rock solid. They've got almost $88 million in cash against no debt. They have quite a healthy cash runway. It does not look like they're going to run out of cash anytime soon, and it doesn't look like they're going to need to do any further dilutions of their stock. So those are two very positive things. And the cash that they have should take them through until they're generating cash from normal operations. Recent corporate highlights. Launched the 2022 Club Car Current, or the Current, the next generation of the Club Car 411 in early June 2021. So I want to talk about this for just a second because I think this is kind of an answer to what I think went wrong in this quarter. So I want to show you this press release that came out on June 8th, just before the end of the second quarter. AYRO receives a $2 million purchase order for new Club Car Current EV following launch. So AYRO today announces the receipt of an initial purchase order valued at $2 million, subject to the terms and conditions of the Master Procurement Agreement executed March 13, 2019. This immediately follows the launch of the 2022 Club Car Current. Prior to this press release, I've never even heard of the Club Car Current. I'm just speculating, but it would appear that something was not quite right with the 411 itself, because their major partner, Club Car, did not place this order until right after they launched this new car, the Club Car Current. I'm guessing they had to rework their car, and they're now calling it the Club Car Current. If anybody knows to the contrary, let me know, but I don't. This is the first mention of the Club Car Current that I see in their whole universe. I went through their first quarter earnings results and corporate update, and they made no mention of a 2022 Club Car Current that they were working on. So all of a sudden now by the next quarter, they've not only worked on it, they're releasing it and they're selling it. So I think that that was the temporary glitch in their sales. That's my speculation. So I guess I'm giving management the benefit of the doubt that whatever was going on, they have found a resolution to it, because they've not only received this $2 million purchase order, but they subsequently received another $2.9 million purchase order after this. So let's go back to the second quarter results. Okay, so here we go. The very next line says, announced purchase orders for the Current from Club Car in the first 2 months following the Current's launch, valued at a total of $4.9 million. Remember, their revenue for the second quarter was only $522,000. So these represent major purchase orders. So that's big steps in the right direction. What this company needs to do is fill out their pipeline. They've got some incredible partnerships. Again, if you want to know more about that, I go through all their partnerships in my previous video on AYRO. All right, the next line in here says, completed integration and setup along with inaugural vehicle production at Karma Automotive, AYRO's contract manufacturing partner in Southern California. So they have a huge manufacturing facility in Southern California, as well as one in Austin, Texas, that allows them a very large amount of production. So I just want to talk about that for 1 minute. This is their 2020 year-end financial highlights. So in that, they talked about they completed expansion of the Austin manufacturing facility from 10,000 square feet to 24,000 square feet to increase production capacity from 200 EVs per month to 600 EVs per month. So right there in that facility, by the end of 2020, they already had the capacity for 600 vehicles per month. Now, their sales in the second quarter of 2021 were only about 522,000. So you can see that is nowhere in the neighborhood of their quarterly capacity of 1,800 cars just from that one facility. So it's not that they couldn't make the cars. Something was preventing them from delivering the cars. So I've given you my speculation. Either way, it seems like they've solved the problem at this point. Okay, I just wanted to show you one more press release to talk about the other facility that they just referred to in their second quarter results. AYRO Inc. and Karma Automotive's Innovation and Customization Center announced strategic partnership. This is September 29th, 2020. The project targets more than 20,000 vehicles to be produced through 2023, valued at more than $300 million. So between the facility that they have in Austin that can produce 600 vehicles a month and this facility that's targeting 20,000 vehicles, which equals $300 million in sales. When we look at sales in the second quarter of 2021 at 500,000, you can see they got about $299 million left of sales worth that they need to do to hit this goal. I'm not saying they're not going to do that. In fact, I feel like with the recent purchase orders, their sales process has gotten back on track. So while they may not do $300 million in the next 3 years, I think you're going to see significant growth in this company. This press release, which came out on September 29th, 2020, really represents the only guidance of any kind they've ever given on sales projections. So, that raised the bar pretty high. They're talking about $300 million of sales in 3 years. So when we look at their valuation, you are going to see they are valued at expectations of wildly less than that. Okay, and then the last bullet point here under recent corporate highlights is they have contracted backlog of $1.8 million as of June 30th, 2021. That is up from about $300,000 of contracted backlog at March 31st quarter end. So that's a significant increase in backlog. So they've got $1.8 million in backlog. They've got $4.9 million in purchase orders for the Club Car Current. So they are set up now to have a good third quarter and fourth quarter. They said that their production facility is ready and up and running and producing cars. In the second quarter, their sales were a bit anemic, but I think with a growing EV company and all the troubles that have occurred across the entire EV sector over the last year and a half, I think it's understandable, and I can give management a pass on one quarter, particularly since I think I see what they've done to respond to this. So, however, having said that, the third quarter and fourth quarter results, I think, are going to be critical. the stock has taken a very big hit. Full disclosure, I am invested in AYRO, and I am bullish on AYRO. I think this is a good long-term investment. However, their stock is thoroughly beaten down, and it was mostly because of this earnings report. So just to very quickly look at the chart and talk about where the price is at and where it may be going. So this stock's been trading at $6 or under since April. Now, it did bottom out right after these earnings. It was under $4. It looks like it got down to about $3.60. So today it closed at $4.14. So that is still very close to its all-time low. I suspect the stock is going to sit there near its lows until there's another catalyst that we see that gives investors a reason to come back into this stock. I believe that's going to happen. Please smash the like button and hit the subscribe button. Also, ring the notification bell so you never miss a video. I believe that will happen before they report the next quarterly results. However, if not, the next quarterly results are going to be critical. The catalyst that I would be expecting is more purchase orders or firm sales. So if they can announce, another $2 million purchase order or any other positive development, then I think that would be a catalyst to start leading this stock back into a more normal trading range. You can see this $4 price range is very low. They got up over $11 in February of this year. So just to do the math on that, if they were to get from where they're trading right now back to their all-time high back in February of this year, that's a 172% increase in the value of the stock. I don't know that that's my target price, but it certainly seems like they ought to get back above that $6 point they crossed with a little bit of good news. And when we talk about valuation, you'll see that this stock is a $149 million market cap. In the EV sector, stocks are trading at anywhere from, on the very low end, 10 times sales, some as high as 30 or 40 times sales. So they were talking about $300 million in sales over 3 years. Break that down, divided by 3, that's $100 million a year. Let's say they're not going to get that and cut that in half and say it's $50 million a year. At just 10 times sales, puts them at a $500 million market cap, which is more than triple what they are right now. If they can get anywhere into a reasonable range of sales, they could experience astronomical growth. If they were to get to $100 million sales by 2023, that would put them over $1 billion. Those are my updated thoughts on AYRO. Thank you so much for watching, and we will see you in the next video.